So I meet a lot of traders and a lot of losing traders, and they're like, oh, I've been trading for 10 years, I'm still losing money, what's going on? And I ask them a whole bunch of deep questions, and normally I find the answer. And this is what normally happens. Their profit equity curve basically looks like this. It's a freaking yo-yo. They're making shitloads of money, they're losing more money. They're making loads, and it's stressful because you'll grow grey hairs doing this. You will be stressed as anything. You won't be able to sleep at night. I remember the bad old days where I used to wake up like every hour during the night just to check my trades. And I remember one of the reasons I left the Air Force was because I was once flying low level, very fast at night, and all I was thinking about were my trades. I was like, this is dangerous now. I was like, I can't be thinking about my trades when I'm flying. So what you need to, and the thing, it's all about your drawdowns. So a drawdown is basically, it's relevant to how much money, it's basically your peak to trough at any one time. And I've met people with drawdowns of 10 to sort of, or hell, 100%. And you need to mitigate those drawdowns. So yeah, you could have a system that makes you 100% per year, but you could have a drawdown of like 100%, or a high probability of having a big drawdown, which is not good. So this is what it should look like. It should be a very gradual, sort of jagged edge sort of incline. And your drawdowns, i.e. from peak to trough, should never really be above, or never ever be above 10%. Okay? Hell, I do not like getting anywhere near 3% drawdown, let alone 10%. So that's what it should look like. And that is the true path to wealth. It really is. And so what I've done is I've created a risk calculator called, go to therealisticstrader.com/risk-calculator. And here is basically proof why you need to put maths on your side. So basically, let's say you're correct 40% of the time. So you put in 0.4. Let's say your average R multiple is 2.5 R. So you put 2.5 in there. Let's say you're going to risk 1% per trade. Anywhere on the internet, it will say, yeah, risk 1% per trade. Okay, well, let's put 1% in. And let's put over 1,000 trades. I mean, if you're basically placing 2 trades a day, that's roughly 10 years worth of trading. It's 1,000 trades, roughly. So, so a trade a day, that's roughly 10 years. So I always do this in any 10-year block. And let's put 10%. Basically, what we're trying to find out is the risk of a 10% drawdown and the risk of risk of ruin, i.e. risk of blowing yourself up. Now, at 1%, so this looks like a really profitable system, right? Yeah, you've got a good R, you're not losing that much, and yeah, the ROI could be good, but guess what? You have a 98.4% chance of having a 10% drawdown. Unacceptable. And you have roughly a 1 in 20 chance of blowing your account. That's not good odds. So you think, okay, you're like, right, instead of 1%, let's drop it to 0.5% max risk. That's a lot better. Look at that, it's gone from pretty much guaranteed 10% drawdown to 1 in 10 drawdown. Not good. That means like one of you will have a drawdown. 1 in 10 is not good. But your risk of ruin is now down. So personally, I like a 0% chance of risk of ruin because I like to be able to look at my investors in the eye and go, you have a 0% chance of losing your money, or all of your money, or a 0% chance of losing at 10% of your money. That way I can sleep at night. But the thing is, you then go 0.25% max risk per trade, boom. And nothing's changed apart from you've just risked less. Yeah, your ROI will be a little bit less, but it's not that much less. But you can sleep well at night going, I'm definitely not going to get a 10% drawdown or blow my account. Does that make sense? Can you see why risk, you have to be obsessive about risk? So, if you learned nothing from today, I've now taught you how to be a better gambler. Because let's say you go to the casino with 100 quid just to flirt with, and you go to red or black. Would you agree that most people will probably put a £5 on each time, yeah? Yeah, on average. You think, oh yeah, I'm gonna play this safe, yeah, £5 at a time. Well, what's the max risk per bet? Yeah, 5%. What do you think the risk of ruin is? 100%. Like if you're going in at 5%, hell, you don't even have a 2.5 R here. You have at best 1 R because it's 50-50. So yeah, you're going to lose your money. So Yeah, and it's all about the low risk, high probability outcome trades. That's it, all it is. All I do is get into as many positions where least risk possible, but high prob outcomes. And anyone that says that when it comes to trading is an idiot. Normally IFAs say that. There are times where you can get into next to no risk trades, but with really high outcome, and that's what most people are on the market. They are firing from the hips, and they are spraying and praying. They are hoping that one of their trades is going to make them $1 million, but it never happens. So you need to be a stalker. Okay, in the nice sense, stalker. Like a sniper, okay? Snipers, they stalk their prey, they lay in wait for weeks, but you know that when they pull that trigger, they have a very high probability of that round connecting to their target, right? You need to be a sniper on the market, not freaking Rambo.